Hey, Lennix.
Yeah, I think I've come across with Wu for quite a long time actually. So I met all of your founders, your team in Shanghai, three Angela's. I think everyone that come across with the potential listing or the business discussion of a very early stage of the founding of Wu. So I think we have a very deep relationships with Chronos and Wu for quite a long time. I believe you already know that. So, but I think our guests might not actually understand what Wu is going on. Yeah, maybe they have some similar concept, but they don't have a clear understanding of the positioning and the utilities of Wu for So I think you need to give us a wrap up of actually what Wu is doing, what's progress so far, and what kind of milestone so far that you have been for years.
Sure, absolutely. Are we starting now?
Yeah, sure, already.
All right, let's jump right into it. Yeah, definitely nice to finally talk to you because, like you mentioned, I've heard of you discussing with our team for quite a while. I think a good background, I'll keep it short, but in 2018, Chronos Research was founded as a quantitative trading firm. And then a year later, as they were growing, they noticed that obviously coming from TradFi to the crypto space, the liquidity on centralized exchanges was still maturing, right? It wasn't in a place where quantitative trading firms could scale, and there were so many different exchanges you had to connect to. So that was kind of how Wu Network was conceived, as this centralized liquidity network. And so it was founded in 2019, and then from there it grew slowly, connecting to a bunch of exchanges and wallets and trading institutions and trading firms, especially ones that would trade on other platforms such as OKEx, and then looking for somewhere to hedge their exposure back. So that's kind of how it was growing. And then recently DeFi summer hit and we realized all this trading volume was moving to the DeFi space. And that was an excellent opportunity because it was the exact same situation where liquidity is a huge issue. Suddenly we have all these layer twos, we have these side chains, they all need liquidity. So, I mean, that was a perfect time for us to experiment and explore bridging our liquidity into the DeFi space. And, the first couple experiments we started earlier this year on Polygon, also on BSC, they were very successful. We were working with some partners such as Dodo. And then recently we launched our own DEX, right? And the idea behind the DEX is we use our institutional trading strategies to quote from our centralized market prices into the blockchain. So instead of relying on some oracle or the liquidity on chain to determine the price, we're using our institutional market making. So the idea is that traders on DeFi get the same experience that they had in CeFi. So, I mean, that's the two directions we're going now on the centralized, providing liquidity to other exchanges and wallets and applications. And then on DeFi, connecting to aggregators through our own DEX. And I think, this year we're really starting to see how this, what we call active liquidity, is really important, because before you just had things like Uniswap where there's two sides of a pool, people dump tons of TVL in there. And then a lot of the DEXs will try to incentivize it by just printing tokens and, giving it to the users. And that model is probably not very sustainable. But this year we saw things like DYDX, where we had on-chain derivatives, and they had market makers for that. So Chronos is one of the number one designated market makers, and then they use Wu Network as liquidity. So I'm rambling a little bit, Lennix. I'll probably stop there, but I mean, that's kind of the idea. We're liquidity providers.
Yeah, I think the last sentence that you have mentioned that we know Chronos is the one of the biggest that's in the market maker is DYDX, but what you're calling that they use Wu as the liquidity, what's that mean? What's exactly what that means?
Well, for a market maker, how well they can provide liquidity, it comes down to how much risk they're willing to take. And then risk, a lot of times, especially when the market is very volatile, which happens all the time. And that's when you need the liquidity the most, when the market's very volatile. It's very important that a market maker can hedge their exposure somewhere else. Otherwise, they could end up just with all of one asset, none of the other, and then the price is dumping, and that's where they lose a lot of money. So because the Wu network aggregates liquidity from so many different centralized sources, they're able to provide really robust liquidity even in volatile times. So Cronos can make markets on DYDX, and then if a trade is filled, right, then they can execute the reverse trade very quickly back onto Wu network, and that allows them to stay what we call market neutral, and they, in a sense, don't lose any money. Right? It eliminates the risk, and then they can compete really well, because market making is all about competing with the other market makers to be at the top of the book, giving the best prices, basically. So with that, it's a win for the platform. It's a win for the traders who keep getting better prices. And then it's a win for Cronos, and it's a win for Wu Network. So it's a good situation all around.
So yeah, just in a really simple term. So Wu Network is basically really super powerful aggregators, price oracle, feeding prices from centralized venue, and particularly serving for DeFi purpose, right?
Yeah, I would say that's accurate.
Yes, that is the beauty of this, because DeFi normally has lack of liquidity, especially when you're talking about somebody like on-chain derivatives. You need a pretty robust, actually very, very robust price oracle, because the market tends to be very, very volatile, and DYD is actually trading in 10x leverage, and you need margin call, you need liquidation. On those kind of parameters, you need a very robust price oracle, that which happen to be provided by Wu Network, right? That's amazing. So you mentioned that the first generation of DeFi, right? The different kind of liquidity pool. Everyone have a push up their TVL for mining their shitcoin, where the shitcoin is finishing their jobs, and the TVL just gone to somewhere else and mine the other farm. So what do you think the next steps? I think I would say this is like the DeFi 1.0. I would say, because they actually utilize their tokens to attract the basic users, or the basic tractions, or for any kind of protocol or any kind of DApps. So what would the next steps on DeFi in terms of development?
Well, I think we saw it when Uniswap went to V3, because suddenly they made it where people who knew what they were doing could have an edge, right? And then that makes the whole system more capital efficient. It also incentivizes traders like Cronos to explore this more. And when they do that, right, they can do it at a much bigger scale than the typical retail model. So I think when you have this active liquidity, it takes out things like impermanent loss, which suddenly makes there a lot more less risk in DeFi. So I think, based on the current regulatory system, right? We see so many of exchanges. Obviously, OKEx is pushing hard into DeFi with OKX chain, right? A lot of models are going to be shifting there, and we have a lot of brilliant people in this space creating just like layer 2 protocols, and then the derivatives platforms on top. But the one thing they lack right now is the traders who can go in there and actually fill the books or create the volume, right? So I think it's going to be a slow, and I think for getting the traders to switch and start trading on DeFi, and then getting the market makers also on board. I think that will be the two shifts that we need to see. And there's a lot of very active ones, obviously, like Cronos and then Wintermute, right? Those guys are everywhere now. We're seeing like GSR is showing up in all these forums now. So it's quite interesting to see everyone merging together with the big institutions and putting up proposals to any regular token holders. So it's quite a cool thing about the space.
Yeah, you mentioned several names like Warner's, like Wintermute or GSR. They actually, I would define as very active market makers or contributors, I would say, in actually DeFi space, especially in the different kind of DeFi protocol. So I think that's but you're the one who only build your own liquidity network. So what do you think the next phase of development move to cater the next phase's DeFi development?
Mm. Actually, I mean, Kronos is they're obviously market making for Wu Network, but they're also trading on other platforms. They're trading on Uniswap V3. They've started trading on a few other EVM chains as well. So, I mean, this is something that they want to do as well. And I guess for us, when you asked your question was specifically about what's going to happen for WuFi, I think WuFi started as just a swap powered by our market data and our hedging strategies. And then from there, we're going to try to explore a lot more assets because we started with just the majors like Bitcoin, Ethereum. We'll explore more assets. We're going to be on more chains. So we're also looking at things like Avalanche, who invested in us, Phantom, these kind of EVM chains. And then obviously from there, the big jump are things like Solana and Near, which are in Rust, not EVM. So I mean, that's a direction we could take. Our goal is to be anywhere that there's traders and volume, right? So if there's that, then we have a business model. So that's what we're going to do. And I think we're trying to be agile and flexible. And it's hard to say what the next trend's going to be. It could be things like gaming items, right? And then we can start doing the same thing for gaming items. So we'll just kind of see how it goes and make sure we're at the edge of the cutting edge of the industry.
Cool. So let's talk because in order to provide liquidity for different kind of chains depending on the protocol, some of them is not even EVM compatible. What's the major challenge within your team to actually, in terms of developments, project phases, the choice of project and the roadmap? I think that would be I can assume it's like a nightmare. very, very difficult and complicated choice.
Yeah. I mean, I think the model is the same, right? No matter where we are, whether it's CeFi or DeFi, the model is still the same, which is just the trading strategy. But the bottleneck has always been the infra team, which is connecting the market makers, the traders, to the platform. So they have a lot of requests on the CeFi side, constantly trying to integrate into other exchanges, and then obviously exchanges will update their the API connection or the way they push the data. Right. So we have to make modifications there. And then now all of a sudden, we're putting requests in to connect to things like Serum on Solana, and then Uniswap V3. So it takes time for the infra team to go and understand how the protocol works, and then the way that for a quantitative trading team, the way you store the data is very important because it needs to be universal for everybody within the firm. Can access this data. So that I think is the biggest bottleneck and the biggest challenge. Besides just like what you mentioned, just predicting which DEX is going to have volume over the next 6 months, because sometimes you want to be a little bit early, but not too early.
Correct. You're right. You're right. That is particular. That's not very interactive. Not very interesting.
Yeah. What are you guys seeing? I mean, what is your thoughts on decentralized exchanges and on-chain derivatives from an OKEx perspective?
Yeah, I think as a central exchanges, it's an inevitable trend that some of the components within CeFi, they're going to be more DEX, and at the same time, some of the components within CeFi, they're going to be much more regulated. So you can think maybe OKEx or Binance or any major crypto exchanges, they will actually split themselves into at least two biggest components or key components, I would say. Maybe we share the same dev resources, marketing resources, PR resources, but on a really general high level, my side would be we're going to have a very, very, very clear-cut component serving for regulatory purpose, like buy Bitcoin with US dollar, for example, or buy Bitcoin with credit card, for example. And that's it, nothing more. But at the same time, we will strive the innovation much more to DEX. For example, might be when we put the entire derivatives exchanges on DEX if the tech is ready, right? You mentioned there's a lot of volume already going to from CFI to DEX. We see the same things too, but we see the technological bottleneck as well. Operating a derivative exchanges not just involve a transaction volume, a TPS, a lot more actually involve a very, really, really price sensitive and high frequency price oracle, because it's trigger all our risk engine, margin calculation system, liquidation engine, mark price calculation, price limit, everything that's involved really, really highly sensitive price, right? So that is some of the technological bottlenecks that I think the industry is going to solve. But in a longer term perspective, in a general trend, I think a lot more trading innovations or fancy financial product will be trade and list on DeFi and DEX, actually. DEX. So that's why I don't think right now right now we're talking about liquidity swap or different kind of mining rigs in DeFi. That I think that's just DeFi 1.0. DeFi 2.0 is actually a more user-centric tokenomics plus a real high-performance DEX. A lot of them high-performance DEX, really focus on different kind of fancy financial instruments, options, futures, swap, structural products, those kind of things. So, and because of this, because the one of the very core reason is because I think the regulators over globally is still having too much trouble and complexity in crafting regulatory framework for crypto derivatives. I think it's like I think they still take 2 or 3 years to think about how to frame in terms of spot and ICO or STO or different kind of tokens or NFT. They don't even have a clue right now. Not to mention the derivative space. So I think these kind of heavy demand, we're talking about 2/3 of crypto volume right now globally. I think they will eventually going to DEX.
Wow. Yeah, I mean that's similar to the way we think, but obviously, I think we're in less of a position to predict the future, right? Because we just need to make sure that we're everywhere, and then no matter which situation, we can move in that direction. So yeah, I think it's something that we're very curious to see how OKEx is going to adapt to the next generation of crypto products, because we think there's a lot of room for both Kronos to trade and then Wu Network to provide liquidity. That's
you can mention that maybe because we have a lot of good education from GameFi that everyone already naturally come to crypto, so they will have their own wallets, their own MetaMask and on-chain wallets. They already have some tokens already. So next step is if they want to speculate, they will find that they are very difficult to do KYC in many exchanges. But these kind of speculative demands or market demand, hedging demand will eventually go to a DEX, and these DEX has to be as good as at least as good as CFI right now. In majority of aspect, TPS, liquidation engine, performance, latency, market data, granularity, and this kind of and the APIs we read exactly the same with the current exchange traded API. I think that is something that all the exchanges somehow working on in those direction, and I think with some of the layer 2 solution that's already available in the market, like CK rollup or stuff where I think that would be substantially increase the performance of Ethereum network or many network. So starting to perform similar with central exchanges, then is naturally we can transit some of the components back from CFI to real DEX. I think you will see it will happen really fast, I think, because we're talking about maybe in even MetaMask, we're talking about 30 million, 50 million people already using that, and naturally, and they're natural user for all kind of DEX, all kind of DEX already. I'm talking about real on-chain DEX. So if they start, if they figured out that the DEX right now is as good as the stock market or the CME that they're trading, so why not, right? Why just open all my contracted positions with it? That even looks safer. You have full control of your money, and you understand all the rules, and trading rules are fully transparent. And right now, all the major exchanges are actually pretty transparent already. We are transparent on price, transparent on funding way, transparent on our insurance fund, transparent on our trading rules. So basically, everything is already well known within the industry. The next step is just put everything onto a protocol level and run it on smart contract.
That's interesting. Yeah, and in the GameFi space, I know that OKX has been very active. So, I mean, is there anything that you're seeing there now where you think this is really the next big thing, and you got to jump on it?
I think you need to jump on it too. I think that is GameFi is actually a very different perspective on chain development. So right now, what we're seeing in GameFi, we are actually pretty active on GameFi for one reason, because we think traditionally making a game is really capital intensive. The risk is super high as well. So that's why the gaming development over the last 10 years, 15 years is getting more and more dominated by the big player, because all the AAA games need heavy resources, developments, capital, very intensive and high risk. And you take maybe 8 years to develop a real AAA games. And so that's why those indie games, for the really fun game, but indie game, independent workshop, don't stand a chance at all in this kind of capital intensive game. And the investor doesn't really want to invest any kind of
right.
because of that reason. But blockchain and GameFi actually changed completely this kind of capital return cycle. Because right now, before you have a game, you just need a prototype or even a concept. They can start selling in-game currency or in-game item, NFT item, in-game currency right now, before you even have a project. So that's why the capital investment and return cycles are a lot shorter than before. And the indie game, the game that already have basic resources to build their tools, right? Even you need at least a basic tool like modern tools, music tools or animation tools, different Unreal Engine, different kind of game engine need to put it in place. Then you assemble a really small team, then you start building new games. So everyone deserves to have a chance within gaming industry. And gaming, I think, is very important to the metaverse development as well. So right now, what we're talking about metaverse development is either gaming or virtual workspace, right? So we need both things to make it happen in order to live and breathe in metaverse. So I think you guys need to have a very pretty good price oracle within GameFi. Right now, most of them are NFT, so we don't exactly need a lot of liquidity. But a lot of them having a governance token actually could be applicable from to different kind of gaming focused protocol.
Yeah. No, I think that's absolutely right. Like you mentioned, the in-game currency, that's an opportunity. Some of the larger, I guess we don't want to call them NFTs. We will call them like semi-fungible tokens, right? Where there's a lot of items that are similar is another opportunity that we're looking at. And I think, just being aligned with people like OKEx and other people that are very active in the venture space who are helping to, vet these projects and incubate these projects, then that's a big advantage for us to better understand the industry.
Yeah, cool. I think everyone is just taking and we'll see what's going on. But I think next phase of development in terms of DeFi and and Metaverse plus GameFi plus NFT would have a pretty good probability to have to make a great deal, a very substantial impact to actual world. I think so. I think it's worth spending your time into the team to have a deep dive.
Yeah, it's definitely a far cry from 2017, where you basically fundraised and then spent all your time trying to develop a protocol. But I mean, now there's just so many different areas you can plug into. And so for the really traditional CeFi guys in our team, we have a few that came down from Wall Street, right? I mean, it's a huge learning experience for them. And then they're matched with the younger, well, I'm not younger, but I'm hungrier type people who are more DeFi. Culturally more DeFi focused, like this mix, creates a lot of interesting things. So it's a fun time to be in the industry.
Yeah. So I think time maybe one final question for Wu.
Sure.
So Wu Fan, you're talking about the next phase development mostly related to everywhere, right? Whenever there's traders, you will be there, right? So what's the next protocol that you're going to be integrate that you think that will have a high probability that we can see?
I think Avalanche would be the next one. Phantom and then things like Nier would probably make the most sense. And I think long term the vision is just every chain, right? Then it's just becomes sort of like a multi-chain exchange. The one issue with that is that a lot of assets right now on different chains are unique to that chain. For example, when you're on Solana, you have a lot of Solana only assets, right? So that's something that we're trying to build more of a unified platform. And I think it's really good for the chains too, because they don't want to be completely dependent on their native projects, but then they don't want to stifle the innovation either. So when you have the trading infrastructure and ecosystem there, and then you're able to bring in these native tokens to it, it's a really sticky and powerful combination. And in a way, we're able to help incubate these projects. Like OKX does as well. They give them like a CeFi bridge where users can come from retail users can come onboarded and then into this DeFi ecosystem. So we kind of see ourselves as kind of like circulating that as well. All right. So there's a lot of opportunities going forward. I think that because it's DeFi, we can move very quickly. You don't need this 2-year roadmap where you quarter by quarter. Sometimes it's just weeks in advance where you have suddenly this idea and then you make the modification to the smart contract, you get it audited, and there you go, right? So I think that's kind of the situation now. And these next wave of DeFi projects, I think, are going to be really fun to follow because they'll hopefully nail the tokenomic loop a little bit better than maybe some of the original DeFi ones. And that will bring real value, right, to the user. So that's something to look forward to.
Cool. So I don't want to waste your time. So very today. Very nice to meet you, Ben. Very excited to actually finally listing token within on OKX. Very happy that you build your ecosystem. We would like to very excited to work with Chronos on our next phase of DeFi and DEX development as well.
Yeah, we're looking forward to it. You can call me anytime.
Sure. Thank you. Very nice to meet you. Bye for now.
Bye, Lennix. Bye.